to the A.J. Brown Show, where we talk about all things investing, options trading, and the like. Now here's your host, A.J., whose primary mission in life is to help you become a better investor.
All right, ladies and gentlemen, welcome back to another episode of the AJ Brown Show. My name is Cyprian Francis, and with me, as always, AJ Brown. AJ, we're going to need some investing tips. There's a lot going on in the market.
I mean, it is interesting, isn't it? Let's get into it.
Yeah, where do you want to start? What's the headline? Because for me, the headline I'm seeing this morning is this auto worker strike, which I feel is like coming out of nowhere, but the news is really hitting hard. But we've had some economic news this week. Where I'll pull up your screen so we could see what the S&P is doing, and we're still in that middle pattern that we talked about last week.
We're not only in that. I mean, my screen absolutely looks like a crap show, if for lack of a better way of saying it. And maybe the better view. I'll come back to this retracement analysis in a second, but maybe a better way to look at this is with our old friends, the simple moving averages. So here is our 200 and our 50, which are probably the most popular simple moving averages that investors look at the markets with. I've also got in there a 30 and a 7, which is something that I use a little bit more frequently with some of my swing trading templates. And you'll notice that the 50, the 30, and the 7 are starting to climb right on top of each other. In fact, if we look at the more traditional, what we call the butterfly pattern, which is a 5, 10, and 20-day exponential moving average, you can see again, this is a classic butterfly body forming. And, it's basically when any moving averages start to consolidate on each other, that means converging or consolidation is happening. And that's usually people who trade breakouts. That's usually their best friend. And that's what we're seeing here. We're seeing kind of a converging and a consolidation.
And real quick on that, right? So anyone that's watching or listening for the first time, you're not necessarily looking for the trend. You're using options to take advantage of this, and we'll go over some more details in the future. But is that a position or is that a strategy that, because the consolidation is happening, are there things that we can do to take advantage of that using options?
I mean, that is the beautiful part about options, is that options fill your toolbox with every sort of way to trade different patterns. So when normal traders are typically trying to look for either something that's going to go up or down, we can trade patterns of consolidation, divergence, sideways, choppy. And so, yeah, of course, there's a tool in our toolbox for trading something that's consolidating.
Okay, so we'll get into a few more of those examples in the future. But when we look at what is moving the market, what if it's news, if it's economic, if it's a trend? I mean, I think that's the concern or the struggle now is we don't really know what to look at because there's a lot of information hitting us.
Well, and there's a lot of information, but I call it micro information. So, for instance, yesterday we had an IPO, right? ARM. ARM is a really solid company in that tech space. They're positioning themselves well to help with the infrastructure of artificial intelligence, along with NVIDIA and some of those companies. And ARM did an IPO. Now, right now in these times, you wouldn't expect any IPOs. You usually expect IPOs in very bullish markets. And out of nowhere, we got that. Well, it wasn't out of nowhere, but we got this IPO and it was priced right, because a lot of times, IPOs are not priced well. They're priced overexcited. ARM was priced right. It actually went up higher than expected yesterday, at least higher than I wanted to see, which, priced it out of something where I would jump in right away. But it's been coming back down a little bit. And I think that ARM is possibly a good thing for my um, long-term portfolio. But with that said, everybody got excited around an IPO and they forgot all about their Fed interest rate woes. They forgot about everything for a split second to deal with ARM. At the same time, today you've got this strike, auto worker strike, which has been building up in pressure, and now people are kind of really upset about the strike, and so they're acting on this little piece of micro news. Earlier in the week, we were getting all sorts of like economic news, whether it be the consumer price index, which we could take a quick look at the economic calendar, which I'll pull up right here. Um, I was reviewing that today just to see if there was anything. You know, we had our economic news with respect to. Let me bring my magic marker out. We had the consumer price index. Well, first of all, Monday and Tuesday there was hardly any news, and so what wound up happening on that front is, uh, you know, Monday and Tuesday were like blah days. There was hardly any price action. Then on Wednesday we had our consumer price index, and that guy came in uh, almost exactly where expectations were. A little bit warmer, but not enough to tip the scales. Also, on top of that, I have to say that oil prices are steadily rising, which freaks investors out as well. It's in the 90s, getting close to being $100 a barrel, so it's been creeping up. On Thursday, we got a big tranche of economic news. We've got our retail sales, which came in super strong, right? The retail sales, not only were they better than expected, well, the prior month was revised down ever so slightly, but this month came in strong. Producers price index, so this is a measure of wholesale inflation. This guy came in better than expected, and last month's was revised up. So, and then today we got our industrial production numbers. Now, this was interesting. The industrial production numbers were better than expected. The last month was revised down from what they had said, but there's this thing that let me actually drill in here, because I look specifically for what I'm doing at this particular measurement, and maybe people should put this on their radar. This is the cap utilization rate. So this is efficiency, right? This is how well are manufacturers, able to create whatever widget that they're creating with the least amount of, human involvement. And so you can see this is almost up at 80%. I mean, that's coming close to an all-time high for cap utilization rate, and that shows how efficient manufacturers are. This is going to be important for us, especially here in the States, as we're trying to bring back a lot of manufacturing from our adversary, China. And so I'm going to be watching this. This means that a lot of people are using robotics and automation, and just really making sure that when they bring in a labor unit, otherwise known as a human being, that they're getting the best quality work and most efficient work out of them. So I look at that number a lot. This came in quite well, quite strong as well. And so that all points to, especially the higher oil prices, to the Fed raising interest rates. But that kind of is like the hum in the background. Then you've got like an IPO out of nowhere. You've got an auto strike, and people don't know what to believe. And what the charts are telling us, Sip, is that, what this consolidation usually tells us is that folks are on the edge of their seat, ready to, they're uncertain, they're confused, and they're getting antsy. And so they're getting ready to, jump in either direction, either start accumulating or start distributing their holdings. That means buying or selling. It's ready to go anyway. And usually when you make somebody sit on their edge of their seat for quite some time and they're just full of this energy, any little sort of news tidbit could get them to act, right? Because they're just so nervous and anxious. And that's what we're seeing in today's market.
Yeah, and we don't necessarily know what that news event is going to be. However, from my perspective, everything that you just broke down, it's kind of like two forces fighting with each other. It's inflation's still there. It's still starting to go up, right? Like even if it's a moderate increase, it's there. And now you got oil creeping in, which probably hasn't even taken its full effect into inflation. But then you have the retail number saying that, hey, it's not stopping people from spending, right? And so we could see a rate increase, and there could be some verbiage from the Fed that says, hey, we're still concerned about inflation, right? And rightfully so, but the rate hike over the past, 18 months, something like that, has been astronomical. And I guess, do we need a pause? Is the interest rate validated? Would that be one of those things that can break the market in either direction?
It would break the market. Right now, investor sentiment is almost 100% that next week the Fed is going to be in a holding pattern. Of course, we're going to pay attention to what the Fed says, because whatever the Fed says, whenever they have a press conference, and they have one of their quarterly press conferences after their announcement next week. So people are analyzing whatever Chairman Powell says to see if they can get some idea, and that can move the market. And don't forget, the Fed is doing really well at selling off their bonds, basically shredding that cash, making every dollar that is in our pocket, more valuable, because they're taking cash out of circulation. As you can see right here, we're getting close to, if I zoom in here to what's happening, we're getting close to that 800 or that 8 trillion mark. We've been not too long ago, we were all the way up at the 9 trillion mark. So we haven't seen the 8 trillion mark in about 2 years, right? They started printing cash to keep the economy flowing when the pandemic hit. They'd like to get us back down to around 4 to 5 trillion. Which is going to be an endeavor in itself. But they're on their way, and they're shredding this cash, which is making every dollar in our pocket more important. But you're right. I mean, this week has been a classic explanation around how the stock market is a bunch of investors that don't necessarily pay attention to the actual nuts and bolts of what the companies they're investing in are doing. And instead, it's a very much a psychological play. They got excited about the sentiment. They got excited about the IPO. They're getting excited about oil prices. They get excited and they start throwing their dollars at it. And no rhyme nor reason. It's more about a psychological experiment than it is an actual analysis into the nuts and bolts of the companies being traded on the markets.
And so that's what we're looking at. So AJ, thanks for the quick market breakdown.
I got to say one more thing. Let's look at the VIX, SIP. Let's look at the VIX. The VIX is telling us that we're at recent lows when it comes to implied volatility. In other words, investors right now are not using the options the way they have in the past. They're not feeling that uncertain that they need to really hedge with options. The options market during this month of September has kind of been on a lull. And so that's just an interesting data point as well, that we're not to the point where we're jumping into the derivatives type of action as a market as a whole, the big money investors.
Well, that could bode well for any of the positions that we're going to go over, that you're going to discuss, that you're going to throw out. That's the beautiful part about options. And so we want to give everybody an opportunity. If you're interested in learning a little bit more about Trading Trainer, AJ strategies, how he's been able to do this for the past 20 years, how he's been able to teach newbies, seasoned, retired, active business people how to use options to take advantage of basically any type of market setup. And right now we're in this consolidation phase. But if that's something that you're interested in learning more, I just threw the link to his daily workshop in the chat. So head on over there and sign up. Otherwise, we've got a little bit more in the show. We're going to go over our trending topic. Maybe talk about this auto strike because some of the stats are pretty interesting that I'm seeing come out of it. We'll get into AJ's pick of the week, our speed round, and then if anyone has any tickers that they want AJ to review, feel free to throw it into the chat, and we'll see if we have time to review it. Otherwise, we're going to take a quick break, and we'll be back shortly.
I get it. You're afraid of trading in the markets. Guess what? I've got your answer. I've got 4 strategies I'm going to give you along with the tools to make it super easy. I'm going right home, giving you the webinar. I need you to sign up below and meet me in a few minutes.
All right.
Want to share some stats on that auto market, on the auto strike?
Yeah, let's see if I can. I mean, I'm almost, because I pulled this up on the Trading Trainer Twitter, and sometimes I don't know if this is real or not, but this is seems like a credible source. Charlie Bellilio, United Auto Workers proposal: 40% increase in hourly pay over 4 years, reduced 4-day, 32-hour work week, faster path to top pay, shift back to defined benefit pensions, cost of living adjustments, 5+ weeks of vacation, more paid holidays, extended parent leave, and then right below that, it had the basically the Ford CEO on CNBC talking about how it wouldn't be sustainable if they wouldn't be in business if that were to be the cut deal. And then it's just crazy that seeing those numbers, like a 40% increase in pay over 4 years. I mean, that's significantly outside of historical numbers. So we're starting to see some pressure in some of these names, but do you have any thoughts on those numbers?
Well, already the auto industry, at least, they're talking about specifically the folks that are putting together the cars here in the States, right? Because that's where the union is located. And already cars, whether they be domestic or foreign, they have a lot of their parts built all around the world. And there's a lot of automation involved. And so I almost wonder if the UAW is throwing this high number out there to get the negotiations started, because you don't expect to ever get your dream, but you put it out there so that something tolerable can be negotiated. But yeah, that would be game changing. I don't think it would be game changing so much for the auto companies. I mean, they are entrenched. I mean, GM, Ford, they are doing quite well. Investing into the EV market. They're getting a lot of federal subsidies, and that EV market, I have to say, as they're building their new assembly lines, there's even more automation built in there. So, my thoughts on that are tread lightly, because you'll also notice that when a company like Mercedes or a company like Toyota, they realize that it's much less expensive if they do the final assembly of the cars here rather than build the cars abroad. They rather build parts abroad, ship them, and then build the final assembly here. You'll notice that they go to states that don't have unions, right? They'll go to Tennessee, they'll go to Alabama, and that's where they'll manufacture their cars. So we got to be careful, unions, but at the same time, I mean, that's what inflation is. Inflation is not only the prices that we pay at the store, it's the prices that our workers get paid. So I got to say, just from a personal perspective, I'm glad that my main job is just managing my portfolio, because I get paid very well for managing my own portfolio. I've taken things in my own hand. I haven't been asking an employer to pay me since 2005 was the last time I had a W-2 job. So, this is a good time as any for folks on a micro level to think about, switching from being an employee to learning how to be an investor, how to take that nest egg that you've created and parlay it.
And that's what we discuss on the show. We go through examples. Back to the whole union topic. There's a lot
Yeah.
of union strikes going on right now, and the concept of union is, I don't know. I feel like starting to get a little bit more dated, and I don't think we're gonna be seeing the end of any of these union strikes anytime soon. So definitely fascinating. But what we want to know here at Trading Trends, how can we take advantage of it? How can we take advantage of the drama using this wonderful investment tool? And like you said, using your money to make more money and keep the cycle going. And so that may tie into our trending
I
topic
think it does.
for today. And so one of our younger guests, Manny, took a break from investing this summer, right? And probably wasn't a bad idea because there wasn't much going on, right? We had the summer doldrums, but now he's back at school, just like many other young studious individuals. And it looks like he's ready to get back into it. And so his question is more along the lines of talking about the importance of being consistent. And I guess with that, AJ, maybe you could tie into the concept of taking a break sometimes, right? Like maybe there's value in that.
Well, so here's the scoop. Um, to be an active investor. So, if you're going to be a passive investor, that means picking mutual funds, buying certificates of deposit. Basically, you're putting your money into something that is going to grow passively, right? And if you do that, your interest rates or your return on your investment are going to be capped. So, a lot of people like to take on this role. If you think about the little rich dad, poor dad um, uh, dissection, you've got employees, you've got self-employed people on one side, and then you've got investors and business owners on the other side. And some people want to cross that chasm and join investors, right? Become an investor. And so something to keep in mind is that's just like as an employee, you don't really take more than a 2-week vacation from being an employee. They don't allow you to do that. You really can't take time off from being an investor. You have to keep it going because it's very difficult, especially if you're setting up positions and creating a funnel of candidates and getting into your groove. Just like when you start a new job, there's always like somewhere between, I think that the studies I've read, it takes somewhere between 2 and 6 months to get into a groove with a new job. It really takes that long to get your investment portfolio back up to where you're more of managing it rather than starting and stopping. So consistency is key, especially because you very quickly get rusty. It's an experience thing. People think that investing is as simple as like following somebody on the web or doing, flicking a switch, reading a book, and it's really not there. Investing is almost a skill that you pick up, that you have to keep your skill honed. You have to keep doing it because if you take 1, 2, 3 months off, getting restarted and keeping your skill set honed, things change very quickly in the markets, and being able to get back going is difficult. Now, at the same time, a pause is necessary if things aren't working for you. And I wouldn't say a pause from investing, but I would say a pause from investing real dollars. So in my group, we always examine in every single one of our trades what the worst case scenario will be. And we define what the worst thing that will happen. We define the maximum amount of risk we're taking on by getting into this one trade. And we size our position accordingly based on that max risk that we've defined to make sure it's in our overall appetite for how much of our portfolio we're willing to lose. And then we plan around that worst case scenario so that every step we take can only get us better results than that worst case scenario. And so what I tell my investors and my students is, if you by chance have everything turn against you and you hit that worst case scenario 3 times in a row, I want you to take your money out of your trades, put it to one side, and start using a simulator, a paper trading. Notice you're still doing the practice. You're not taking a break. You're just taking a break from real money investing, because obviously, if you had 3 worst case scenarios in the row, it's not the market throwing you a curveball, it's you. You're doing something wrong and you need to hone your skill through simulators, right? So I don't ever encourage, Manny, you or your dad, because I remember in your email you were writing about how your dad also took a break. Um, you should try to get it to a point where it's just so every day, it's like brushing your teeth. You brush your teeth every day. I hope you don't take a 3-month break from brushing your teeth. Well, you should also take 20 to 30 minutes every day and sit down and analyze your portfolio and figure out what you're going to do for the next day. Um, I'm dead set belief on consistency is key.
And these days it can be a fairly simplified version of that, right? With the apps that we have on our phone
Oh
to
yeah.
see end of day stuff, just to see certain trends, um, and so that's good to know, AJ. And from my experience, it's certainly not as extensive as yours. I like using this sports analogy, right? Where it's like, hey, if you want to be the best in the business, right? Let's just say LeBron James, Michael Jordan put up 36 points a game. They're still making mistakes. They're still missing shots, right? And even at their best, the next game, they're still going to miss some shots. But if they make more than they miss consistently over time, that is what investing can look like. Is you're trying to build that consistency. You're trying to know when to pull the trigger, and that's an experience. That's a emotion, and obviously you can use some tools to help. But keeping that craft rolling, I agree, is very beneficial. So thank you, Manny, for tuning in. We're excited to have you back and asking questions, getting into the investing. With that being said, AJ, Manny and his dad and the rest of the crew are probably eager to know what you're looking at this week. And so, with that, let's dive into your pick of the week. And this is a very popular name that most of us should be familiar with because they're probably powering one of our devices in the household. And this is Intel Corp, ticker symbol INTC. And so, what opportunity are you seeing here, AJ?
Oh my gosh. So I've been following Intel for a while. I think we featured it quite a few shows ago. Let's take a look at Intel. This is a 2-year chart on Intel, and you can see that they kind of had a bottom here where they spent about 6 months hanging out in the bottom zone of where they were trading. And then they started this steady climb. Now, just because you've got a steady climb doesn't mean that premium selling is off the table. What it does mean is that you have to be a little bit more strategic. In other words, you have this initial investment that you set up that allows you to then create the premium trades after that. We call that our initial covering position. So in this case, because we've got the ever so slight trend, and we're talking about, it's not the most aggressive trend. So I could trade this as a trend trader. But what I want to do is I want to make sure I set up that initial covering position such that it will appreciate with that gradual trend over time as I'm selling premium in between. And so let me zoom back in now to what's happening currently. I'll bring us back to a 3-month chart. So we're currently at a top, and we've still got that underlying uptrend going. And so this is the perfect time if you've got that initial covering position in place. And we talked about setting up that initial covering position quite a few shows ago. If you do, now is the time you're getting this signal where we want to sell some premium. And I would sell some at the money or even slightly out of the money premium. Maybe this $40 strike price is a good premium to sell. And since today is options expiration in November, in September, I don't even know what month it is, in September, I would think about October or even looking at some of the weekly options. Remember, when we say near term, ideally we're talking about 3 to 5 weeks to expiration. So I would look for a near term, slightly out of the money option. If there's a 39 strike price, we can check right now if there's a 39 strike price. We'll come over here to our options chain and we'll look at our October 20 options. Oh yeah, they're trading every dollar, which I would expect Intel to do. So if you sold a covered call right now, you'd be making $1.10 roughly per option share or $110 per contract. I mean, that's a payday for every contract that you sell. Then you come back here. The other thing that I would suggest we do is we buy a protective put at this time because the protective puts are going to be very inexpensive. We'll buy a protective put such that, slightly above our break even price on whatever our initial covering position is. Or if you wanted to, you could probably place it even more conservatively and put it up here at the 32 or 33. You're going to pay a little bit higher for that, but hey, you lock in more profits that way. So I would do those two transactions right now, assuming you've got your initial covering position, because anything that goes against us right now will boost up that premium selling trade, and it will make that protective put work for us as well.
And how long are we looking to keep this on, or what's the potential in terms of time?
So the scoop that I would be thinking about is, well, by selling that expiration date 3 to 5 weeks out, our payday is 3 to 5 weeks from now on that one. We get the money now, but it's basically locked up until that position is closed. But as far as the protective rolling out that protective put, meaning we don't need it anymore and we can sell it back, I would simply wait for a signal, just like we're getting a signal right now that a top is being found. I'd wait for the next bottom signal. So again, it looks like that would also correlate with the next 3 to 5 weeks.
Awesome. So that is Intel, a nice little setup, nice little 3 to 5 week opportunity. Definitely a name that could see some movement. So love the setup, love the opportunity. Thank you for that, AJ. We did get a name that came up in the chat, and it's not surprising why it did, and that's General Motors. We've discussed it as an opportunity, but today they seem to be a little bit more in the news. So what's happening over at GM? Well, it looks like they're increasing.
Yeah, I'm not worried about this auto strike with respect to the stock. In fact, if anything, I think this may, and I hate to be down because I'm actually a fan of people making sure that they get paid what they're worth. Um, but I think that this company will endure. In fact, I think GM is positioned well with the amount of investment that they're getting from different entities to translate from gas to electric. So I've been a proponent of buying this stock, buying either the stock or buying the back month deep in the money call option right now. This would be we talked about how if you had that initial covering position in place on Intel, now would be the time to get your premiums out of it. For GM, I'm still, I've been saying it for the last couple of weeks. Let's go ahead and buy. It's almost to the point where you're missing that opportunity to get in at bargain basement prices. So I would say GM, I'm still looking for acquiring that initial covering position. So again, buying the stock, buying the back month deep in the money call options, or if you want to play the game a little bit, we talked about selling cash secured puts and collecting premium in hopes to get a bargain basement price for the stock. I'm still sticking to my guns that that's what we want to do with GM.
Yeah, and if you head on over to our YouTube channel, we did do an extensive analysis and breakdown of that opportunity about 2 weeks ago. So that, I mean, looking at the chart now, that setup and analysis might be very close to what we did there. So head on over there, check that out, get a little bit more in-depth analysis. Appreciate the question, James. With that, let's head into a few more names. This is our speed round. We've got viewers and fans from all across the country giving us, well, I guess, do you want to just give a quick breakdown of what you just drew there? You got the two.
Oh, yeah. I look at GM and I see that just not too long ago in the springtime, GM spent a little bit of time at this $33 mark as well before popping up on their excitement going into earnings. And so I'm expecting the same sort of price action again. It's really hard to knock a company like General Motors or even Ford down. They're just a huge machine. It would take a lot. I mean, yes, it sounds like 13,000 auto workers going on strike. That's a kick in the knee, but I'm sure that this is a temporary, what I call transient external stochastic shock to what's going to happen to the stock price.
Yeah, we could get positive news out of it that jumps the stock in the direction that we've been analyzing the past few weeks.
Absolutely.
So sometimes that's like that reverse effect of what you think is going to happen or what you expect. The opposite happens. All right. Thanks, James. Thank you, AJ. Let's head into the speed route. Our first name is from Ted in Cape Cod, Massachusetts. A darling. They've made movies, documentaries about it. And that's AMC Entertainment, ticker symbol AMC. The Reddit Wall Street Bets name, favorite. What's going on in AJ? Or what's going on in AMC, AJ? Sorry.
Yeah, that's okay. Well, so yes, AMC was big with GameStop, if you remember. Reddit really put an end to big money making short sales against this. Although if you look at the NASDAQ level 4 data, you can still see hedge fund traders are still betting against AMC. And I think there's a reason why. I mean, first of all, we've been talking about unions and striking all morning. We can't, you've got actors and writers that have been on strike for a couple months now, I think. And they've pretty much stopped the whole fall season of TV from coming out. Netflix has very little in the pipeline anymore. And as far as the movie theaters concerned, I mean, there's been this migration. If you haven't noticed, less movies, except for some, if they really put their mind into it, like the Oppenheimer and the Barbie, a lot of folks have been going the way of like 8-episode series rather than movies. I mean, take a look at the whole Star Wars franchise with The Mandalorian, and then they've got one on Boba Fett. And instead of releasing these movies, because they got to a point where they released a couple of movies like on Han Solo and things that kind of started to go down into they realized that these series are a better way to release the content in a movie, right? Release the 2 hours of a movie over 8 episodes that are 30 minutes long, something like that, right? So with that said, what's the future of movie theaters? And AMC would be smart to figure out more automation, I would imagine, and more marketing in order to keep this business growing. But a lot of investors are saying, I don't want to do it. And you can see a couple things with AMC here, by the way. They barely break even. They sometimes lose money. And they just did a split here. And yeah, that's interesting as well, right? They're trying to boost the price of their stock by reducing the number of shares, or actually drop the price of the stock. It's not a reverse split. It's actually a they split their stock into two. or did they split their stock even further? Let's see if we can get that information. Anyway, I'm saying all that because I'm not sure that you want to invest too heavily in your AMC here. Split 1 to 10.
Mhm.
So they broke up their price in 10 there. So I guess it was trading up around the $100 range. I'm not sure. I'd have to go back and look. I don't think there's much here for you. I don't see any patterns that we can consistently trade options on. Let's take a look at the option chain. Okay, so they're trading every dollar, and there's a lot of liquidity on it, but I think it's all emotional buying and selling, a lot of speculative stuff. There's nothing that I can actually tell you to do here that would be anything more than speculative. So I almost feel like let's take AMC off of our immediate hot list and maybe relegate it to our watch list, something that we check in with periodically in order to see where it's at. But I think you need to hold off on AMC right now. It's got too much hype.
Yeah, and I think that's what I was going to say, Ted. If you don't know AJ, he likes the less exciting names because they're more consistent and more predictable. This here, there's a lot of news going on. I mean, who knows when the next movie's going to come out about the tale of the COVID price manipulation era. There's a few in there, or a few out there. All right, Ted, thank you for that. Moving on to our next name. Maybe we'll find an opportunity in this next one. This is Elizabeth from Lincoln, Nebraska. Interested in a name we've covered a few times, and that's Carvana, ticker symbol CVNA. Another
I gotta
auto name.
say, yeah, I gotta say about Carvana that I put them out into the graveyard. I had said that they were dead. Investors were no longer interested in this company, that their model was bunk. And look at what's happened just in the last 3 or 4 months. They did a huge marketing push. They've got a loyal base of people who have now used them more than once, right? And so let me zoom out a little bit so you guys can get some history on this Carvana. So, as you know, this is the kind of mail order used car type place. And it's just really easy when you want to sell your used car. It used to be like putting ads on Craigslist, putting them in the, God forbid, newspaper, Auto Trader, and having people lucky lose come. Now you just go on Carvana, you get a bid, and they're the middleman. They're taking care of all that marketing piece, and they just come pick up your car and give you cash. And so that's just really, really easy when you want to like upscale or something like that. Or if you're in the market for a used car, they've just turned it into a factory. So they went on this hype high when they first were released to the market, when they first IPO'd. Then they came down and they were as low as $3.50 a share. And that was kind of a big kick in the teeth when they, released themselves at $350 a share to go to 1/100th of the value. And I had marked them as gone. And they have rebuilt their business, less of on hype and more of making sure the nuts and the bolts of their business actually work and work well. And as you can see, just back in April, they were still trading in the single digits, and now they're trading up in the $40 to $50 range. So here's, from a technical perspective, what I'm looking for, and I tell my traders a lot about this, is I like to see 2 tests of a level of support and 2 tests of a level of resistance to call some sort of channel mature, right? And so I'm waiting to see if right now at $55 we don't find ourselves at a top. If we do, then I'm going to feel very comfortable about calling my level of support somewhere around $37, $38 and my level of resistance around $55. And this is going to make for a really great premium trade. Now, again, I would let this top form. I would go ahead and I would plan out my premium trade. In other words, I would analyze case scenario. I would create a trade plan on What are the steps I need to do to leg into this position so I don't hit that worst case scenario? And I would basically wait for a bottom here around that $37 mark and start my premium trade. So I would set up an initial covering position. And I bet you're thinking the same thing. I would set my initial covering position, either try to buy the stock or buy a back month to deepen the money option for as little as I can. And then I'll be set for the next few months, if to just get that monthly premium in, make 5, 10, even 12, 13% on this trade every time I sell premium and I roll out a protective option. So I like Carvana a lot. I'm sorry that I put them on the graveyard 5 or 6 months ago, because it looks like they did what they needed to do to be a viable company. And I think we can go forward with this. But again, I want you to plan it well, and I want to watch to make sure that level of 55 and that level of 37, 38 hold out for us. So let's let that channel mature as we're getting prepared to execute this strategy.
And when you mentioned they put together a large marketing push, the first thing I think of is all of the OTT, like Hulu and Hulu ads that come up. Like they do, I see a lot of Carvana ads that come up when I'm watching my streaming. So maybe that has something to do with their visibility and their marketing push. But yeah, it's good to see the name back out of the graveyard. So we'll see if there's an opportunity. So thank you for that, Elizabeth. Moving on to our third name, back to the East Coast. This is Naomi from Miami, Florida, interested in United Micro Electronics, ticker symbol UMC. This is a new one for me.
All right, let's take a look. All right. Okay. I love that it's in the single digits, right? That means that it's affordable. And we can set up premium selling positions on this. What I'm going to do is now slowly look at what I call fractal patterns. This is where you go back in time and you look at different time periods with different size bars, and you get to see if there's a repeating pattern that you start to see. So I'm looking at a 2-year chart. I'm actually looking at a 10-year chart. So you can see that for the longest time, this little penny stock, a little bit more than a penny stock actually, but a $2 stock, it traded that way for a while. And then it really popped up by about tenfold, maybe fivefold, and then it settled back down. Now that we've got kind of that bigger history, I see we settled down at $6.80. This is one that's a little bit difficult for me to justify, um, you know, setting up a premium trade right now, because I don't have level of my boundaries of this sideways channel. And so $6.80, maybe $7. What I'd like to do is I'd like to see this one again mature. Maybe that's the theme of our speed round, is let's let our channels mature. Let's let us understand. That doesn't mean that we can't do a premium trade. What it means is we probably won't be able to set up one of these premium trades that last for 5 or 6 or 7 months, because for those, we need to have a more defined sort of channel. Make sure you've done your soft analysis. So go back and look at the headlines for the last few months. See if you can figure out why, during the months of June and July, this dipped down. Also, I'd look at splits, dividends. I see that they're giving a pretty nice dividend. Maybe that was a one-time dividend to its investors of 58 cents per share. That's a lot of money to be giving your investors when your stock price only trades at $6.80. It looks like that was a one-time, but that's kind of nice. And that would be a reason why, if they're going to plan some of those in the advance, why you might want to buy this at $6, $7 a share. But yeah, I would make sure I do my homework on this stock. Look at what the analysts, whether they're recommending or not, see what they're saying. take that with a grain of salt, but it's always good to take a data point. And let's tread lightly. Let's let this sideways channel mature a little bit more so that we can get the defines of what would be support, what would be resistance. And then once you've done all your homework, I wouldn't be against setting up a premium trade on this, but I think we're a little bit premature right now.
All right. Thank you for that recommendation, Naomi. We did get another chat come in, and this is from Jose, who's interested in reviewing HRL from last week.
Oh, yeah. Yeah. Hormel. So we talked about setting up that initial position, and I think that was right. We were going to allow this thing, we were wondering if we had gotten too low in our price and if we weren't going to return into our channel. It looks like we did bottom. This would have been a good time. In fact, it's probably still a good time, although you're on the tail end of picking up some initial either the stock or a back month. I think this one I'm recommending actually going out if you can and buying the stock, because they do give a very nice dividend every quarter. So it doesn't hurt to buy that stock. And then we'll be set up. We'll go ahead and take advantage of any appreciation that occurs on the stock. If it falls short of reversing, if it falls short of about $42.50, so put that on your chalkboard, that's your target. If it goes above $42.50, then let's just look at how we can sell that stock and take the money and run. If it reverses short of that, then let's sell premium and buy protection and start the premium trade process on this. Let's start collecting some income on it. But as of right now, I'm still standing by my recommendation of it's time to set that initial covering position. It's almost past time. Let's go forward with that one.
All right. That's a nice little setup from last week. So thanks for reviewing that. We're running short on time. That concludes our speed round. Excuse me.
It's good that Manny's back. I was wondering what happened. We used to get questions from him all the time. I bet you Manny is either in 6th grade or starting middle school if he's back in school. That's cool.
Yeah, well, a lot of people are back to school and a lot of people are back from vacation, right? The markets are brewing and, we're going to be looking to take advantage over the next couple of weeks as funds make moves, right? As money goes in, money goes out. That's what we're here for. All right.
Holiday season right around the corner.
That's right. And we're going to continue to be getting interesting economic news. I can only imagine month over month. All right. Before we head out, we do want to give everyone a quick note that if you've enjoyed the broadcast, if you're kind of sitting on the sidelines and you're not necessarily sure if you want to get into options or if you want a little bit more insight, a little bit more instruction, AJ's got a wonderful one-on-one coaching program where you can work with someone on his team, an expert, to really define these strategies, to go over your own style of trading, your lifestyle, and to find a way to make the two work so that you can put your hard-earned money to work, but also be able to sleep at night knowing that you have your risk parameters and you're utilizing proven strategies over time. So we've gone ahead and thrown the link to sign up to that in the chat. So if that's something you're interested in learning more about, head on over there and check it out. There's a free scheduling section where you can just book an appointment and chat with somebody. Highly encourage anybody that's interested in learning more to head on over there. And heading into the weekend, heading into next week, AJ, what should we be keeping an eye on? Because we did have an earlier expiration date, right? So does that play into any of our strategies for the rest of the month heading into next week?
It means that we have an extra amount of time. When we have this early expiration date, at some point here, we're going to get an extra week between expiration dates, and it just gives us more time to set up our strategies. It kind of gives us a breather moment, a time to plan. I'm very, very strategic with what I like to place my money into. I don't just trade and try to get in and out. I like to set up these trades that will be paying me for the next few months. I like to set up trades that are going to last anywhere from 3 all the way up to 8 or more months and be paying me throughout that whole time. I like to target earning at least 6% on my portfolio, having my portfolio grow at least 6%. And even with all the tumultuousness over the last few months, and even these past couple of months, the summer doldrums, I've been beating that 6% target. It's been closer to 11% in my portfolio, the growth every month. And so it's totally possible. And I think that it's just about being consistent. And, like you mentioned, and I just have to emphasize this, you mentioned that with the tools of today, it's easier than ever before. And it's so true. I remember when I first started, I always had to worry about, am I going to have dial-up access to the trade system, and am I going to have access to all these different data feeds in order to do the analysis? Now you can find these brokerage packages that are all in the same place. You get all your information at a touch of a button, and you can do it wirelessly. I can use my iPhone as a hotspot and connect up my laptop, or I don't even need my laptop anymore. I could use my iPad or my iPad mini, my small tablet, and do everything I need to do. So there's really no excuse. If you're going to take this jump and become an active investor, consistency is key. Figure out with the tools of today, it's easier than before to be able to create a daily routine that as you get more and more consistent and more practice at it, it'll reduce the amount of time to the point, just like in the beginning. I remember, I'm living it with my toddler right now. It takes like 5 minutes to get her to brush her teeth. We have to go through the process of like playing with the bath toys, even though she hasn't taken a bath. And then she has to come over here, and then it's about open your mouth, close your mouth. And then it's like, make sure we cover all the teeth. But when I brush my teeth, I've been doing it 50 years now. It only takes me 30 seconds, to really get a good brush on. And that's because I'm practiced at it, right? Same with this investing. I can't emphasize that. I want you to spend this upcoming week just getting consistent. Think about a consistent daily routine. What are the pieces that you need to do every day, and how can you be consistent at it? Don't sit down at your trading terminal or at your tablet and do something different every day. Do the same routine and get it into something that you can then make more and more efficient.
And that's why we've had so many episodes. Episode 98, we've been consistently coming online, streaming, telling you guys about the opportunities. I think also next week, the Fed has their decision. And so on next week's show,
right.
We may have something surprising to discuss. We may have some verbiage to go over. So a lot of
next week's show, we have the guest.
Oh, that's right.
Should we? Isn't that exciting?
Yeah. I don't know where his name is, but I know we have a special guest. Serge
Berger.
And we'll be broadcasting an hour earlier, so that information should be hitting your guys' inbox, along with some details on what we're going to be discussing. So stay tuned for that. If you've enjoyed
episode 99 is going to be killer. Don't
99
miss it.
And then 100 right around the corner. So 2 special episodes in a row. We'll have to come up with something. But if you've enjoyed the broadcast, hit that like, hit that follow, hit that subscribe button. We certainly do appreciate it. We appreciate you guys tuning in. AJ, I appreciate you coming online and educating us a little bit more every week. So appreciate it. If there's nothing else, we'll catch you guys next week. Enjoy the weekend, everyone.
Bye, everybody.
Thank you for tuning into the AJ Brown Show. If you're interested in learning more about AJ and his investing techniques, head on over to tradingtrainer.com and create your free account today. And if you're not already a subscriber to the show, hit that subscribe button and we'll get you fresh content daily.